Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Tuesday, the 17th of August. Starting off with AIQ, which I wasn't going to cover, but it's kept on going up, so almost obliged to do so. A couple of points to note here. First is the end of day close yesterday above that, at the top of that gap there from back in April. That was at 15 pence, so that actually gave us an end of day close buy signal for the stock, and clearly that kind of worked. At the moment, we're a bit of a no man's land. We've got that resistance there towards 40 pence, which has been there since early last year. But maybe the final point to note really here is that while we're above, let's say 20 pence, because 20 pence was post-April resistance, the top of that broadening triangle, if you believe that is the right configuration for the daily chart here, is up to 70 pence. So let's see if above 20p the shares can get up to 70 pence on that rather volatile situation. Situation which hasn't been quite so volatile of late is Amur Minerals, and here just the first glimmer that the shares are ending their 2021 flat price action period. Here we're looking for an end of day close above the initial August resistance of 1.95, and that would also clear basically the 2021 resistance to date. Obviously 2 pence plus would be fantastic, and that would suggest that we're heading up towards the top of a rising trend channel as high as 2.6 pence. Perhaps by the end of next month. Upside value while we hold above the broken resistance line there, or sort of the top of that triangle there from back at the beginning of the year at 1.7 pence. So while we're above 1.7, we have Amur technically in recovery mode. Another stock which has been on the back foot for a long time, but maybe back on the front foot now, is Allied Mines. And the reason for saying that is the little bull flag breakout that we've had here after a falling wedge breakout and a break above the 50-day moving average at 21 pence. I waited a long time for this to make its sort of bullish presence felt. There was also a final bear trap for the shares below 20 pence, a bear trap below the June support. So it looks as though there's something going on here at Allied Mines, even though the volume hasn't quite caught up yet. But at least while we're above the July peak there at 22 pence, looking for the top of that broadening triangle from February's high as 32 pence, perhaps as soon as the end of next month. So let's see how that one goes. On to Bradda, which has got sort of created a little bit of excitement in the market, even in its short life that we've had here on the stock exchange. Here we've got this sort of opening gambit for the shares with a sort of range between 5p and 9p, looking for an end of day close above the initial resistance for the stock around 8.87. So end of day close above that could be enough to take the shares up to a notional price channel top as high as 12 or 13 pence as soon as the end of next month. I waited a long time for the next stock. Here we have Canadian Overseas Petroleum. It's very interesting in the sense that sort of slightly reminiscent of the Eurasia return from suspension, which I suppose was eagerly awaited, let's say. Here we've got a situation where the key point is probably now going to be the high before the shares were suspended, 0.39. So far there's still a gap there, the low currently 41.41.5. So while that gap remains in place, we have a potentially very bullish situation, and one would normally call that up to the top of the trend channel there, which is approaching 0.8 pence perhaps as soon as the end of next month. Maybe at a slightly less good scenario is that we would fill the gap down to 0.39, but at least while there's no end of day close back below the floor of the channel there around 0.37, we are in bull mode and should head towards 0.8. If there is a gap remaining, then that would just speed up the process of a move towards that 0.8 pence area over the next 4 to 6 weeks. So let's see if the charting works there. Stock which I was requested a couple of weeks back, which is I'm glad I was requested because it's done quite well since, is IMC Exploration. Here we've broken that line of resistance from April around 0.8 pence, and we've also broken above the 50 and 200-day moving averages, the 200-day line at 0.95. While there's no end of day close back below that, we're looking for 2 pence at the top of the broadening triangle from July last year. Obviously, if you're cautious, you might wait for 1.2 pence to break as a momentum signal before pressing the buy button. But at least it is looks as though while we're above the 0.8 area, this is a recovery play. Stock which I don't look at very much, but it's here today's Logistics Development Group. Here we've got a situation where nice little bounce above the 50 and 200-day moving averages. That's sort of underlining the fact that support's coming in above the floor of the price channel here on the daily chart from December, and we've also had a golden cross buy signal, I suppose, at the turn of the month there between the 50 and 200-day line, so that's looking good as well. All we're looking for now really is an end-of-day close either above 14.5 pence area, which was basically middle July resistance, or if you're fussy, then you wait for 15.25 or 15.5 pence to break before targeting 25 pence at the top of that channel by the end of next month. Upside argument valid while we hold above 11 pence. I think that would be a generous stop loss. I wrote about Love Hemp yesterday, and so it's worth looking at the chart, and that sort of describes the reason why I chose the shares. Here we had a break of that 2.3 pence resistance line there. That's been in place since the beginning of the year, and we've already hit what would have been the initial target there at 2.9 pence. Should at least be able to squeeze up to the 200-day line at 3.4 pence, as that's been the resistance on the way down for the shares. And going back a bit, we can see that, I'll try and go back a bit, we can see that basically the last major resistance for the shares above 3.5 was back at 6 pence. So looking for the 200-day line at 3.4, 3.5, and then after that up to 6 pence perhaps, even as soon as the end of next month. Full argument valid while we're above 2.3 pence. I think that should cover it. Saw somebody tweeting with excitement about Quadrise fuel, so maybe be rude not to take a look and see what's going on there. Here we've got a situation where there appears to be a broadening triangle, which is normally very good news for chartists. Top of the channel there heading towards 8 pence. That's valid while we hold, certainly while we hold above the July intraday peak at 4 pence. Above 4, looking for 8 on Quadrise. So rather simple calculation there, and a nice bear trap rebound from below the 200-day moving average at the turn of the month, and a gap close buy signal as well. Both the 50 and 200-day moving averages are rising as well, so I think that tweeter looks like he's on the right track. Those of us who are old will remember the Labour manifesto of 1983, and it was described as the longest suicide note in history. It looks as though the latest chairman's statement from Remote Monitor Systems is vying for the pole position in that respect in terms of, but so far we've got the shares just breaking back below the former low last month at 0.7 pence. That's going to be the key level over the near term, and ideally we want to see the shares close back above 0.7 today and then maybe fill the gap up towards the 0.8, 0.85 area. Otherwise, there's a risk, I suppose, of a move down towards that support line there from back in May around the 0.5, 0.55 pence level. But does appear to be that this is at least an interim low area for the shares, 0.5, 0.6, and there may be an overdue rebound. We've had spikes through the 50-day line every couple of months for the shares, and I suppose we are actually looking at a sort of delayed one. We've sort of delayed on perhaps the next one for the shares, but watch 0.7. End of day close back above that could be the first trigger for recovery for the shares, especially with the bullish volume that we're seeing so far today. On to just a couple more to go now. Sunrise Resources. Here we've had a nice gap to the upside through the 50-day moving average and actually up to the level of the 200-day line at 0.25. The longer we remain above the floor of the gap there at 0.23, the greater the chance of the shares retesting the low 30.3s, rather 0.32, 0.33, as that was resistance at the start of the year. So looking a little bit more positive for Sunrise Resources at the moment. If you're fussy though, I suppose maybe you wait for an end of day close above 0.25, 0.26, which is that line from January, but we do have the first signs of recovery for the shares. Nothing so fraught for Tirupati Graphite. Here we've got a situation where shares look to be bouncing off basically what's the floor of a rising trend channel. That's been in place, I suppose, since the early part of the year and running around the £1.10 level. Above that, we're looking for a retest of the best levels of back in July. That was towards £1.36, and maybe that could be seen over the next 2 to 4 weeks. If you're looking for an extra momentum clue, then that would be an end of day close above the 50-day line at £1.25. But it's good that so far the shares have managed to bounce and fill that, or bounce off the floor of that gap that we had back in June. So above 110 on an end of day close basis, looking quite positive for Tirupati at the moment. That's it for me today. More updates tomorrow.